Hey everybody, welcome to the Victoria Real Estate Show. I'm Jane Johnston with the Briar Hill Group at Remax Camosun, and I'm here with Andrew.
Hey everybody, Andrew Plank here with the Vibe Real Estate Group and Roy LePage.
And
Jen Lowe, mortgage broker with DLC Modern Mortgage Group.
Awesome. How is everyone's week going?
Busy. Yeah, I've got two subject removals due today. One has already happened. I'm waiting on the second, hoping that this happens.
Isn't it always, I always find it exciting. That means you still love your job, right?
Yeah, well, it's exciting, but there's always a nervous seller going like, is it going to happen? And when it looks like it should, but then it's just not yet happening, there's always that angst. Don't you feel that when it was due today, it's due by end of day midnight, but come on guys, you got your stuff together, let's get this done sooner.
So, actually you and I have hardly done any transactions. I think we've done one on each side, right?
I guess so. I haven't tracked it, but we haven't done many. Yeah.
So it's interesting because I always keep the other realtor informed throughout the whole process of what's going on. Like, hey, we just so you know, we found out like this is being pre-approved. I mean, it depends on what the buyer tells me to say.
Yeah.
But I asked the buyer if I can say that sort of stuff.
It's a fine line because they could get a clearing bill, what you think is a great building inspection. The building inspector tells them 5 times, no problems, this looks great, really wonderful property. But then they go home, they review it, and you've already had a conversation. If you've had a conversation with the other agent and said, oh yeah, it went well, no problem, that's not good because it'll come back to haunt you.
I don't usually say that.
No, not until it's done deal.
It's usually the other way around, actually, that we're going and the buyer has these rose-colored glasses. Oh, it's great.
that one really drives me nuts. Honestly, like we see a lot of building inspections and we're trying to tell our clients like this place needs a lot of work. This was not a great inspection. I'm like, oh yeah, no problem. I can deal with this. Not a big deal. Well, I think we can get you something better up the road. I kind of like this. I'm fine. Well, maybe we can renegotiate. No worries. I'll just remove conditions. Okay. You sure?
I do talk to the agent though, and I'll say something like, hey, just so you know, we're working on our insurance. Wondering if you have this document available. We need it for blah, blah, blah. Anyway, usually what happens, I just do it just to communicate because I find if it's totally silent, you're wondering what the heck's going on. So.
Yep. We all appreciate updates, folks. Don't we all? Right, Jen?
From the lending standpoint, it's always interesting. Sometimes we're up right to the wire and other times we're able to get it done with, multiple days prior to that actual subject removal. And we always appreciate when it's done early, but depending on the circumstance, it's just hard when we've got, if we need additional documents or we're waiting on an appraisal or different circumstances, make it that we're right down to the wire.
I do find that financing is the last thing usually, and insurance, the two last things. Insurance.
Well, financing takes the longest, and it's generally just the thing that even if it started early, it takes the longest, and it's the biggest one that you're kind of like, should I remove this or not?
The other thing is that I always tell, as a listing agent, I always tell the buyer agent when an appraiser went through, because the appraiser doesn't necessarily contact the buyer agent because it's on behalf of the lender. So I always say, just so you know, an appraisal happened today, so the buyer's aware. And I always tell the seller, I don't always tell the seller, but mostly I tell the seller, this is a good thing because it means preliminarily they're approved. They want to make sure that the house is not a shack.
Yeah.
All right, so let's do the show. We're doing the monthly market update. It's March Madness. We have had a busy spring, so let's just see if the way we're feeling is actually the way it actually happened. And if you like it, send it to your friends. Don't forget to subscribe to the show. Comment if you have any questions and share. We love to hear what you have to say. Okay, go ahead, Andrew.
Yeah, so here we are, February 2025. And so far this month, as of yesterday, March 3rd, we had 528 net unconditional sales. We've had 1,154 new listings go live. Quite a. That was for February. This is all for last month. So, and then active listings at the end of the month was 2,630. So we're up a bit from last year for active listings. Last year was 2,364. We're up from new listings. Last year was 1,088. And we're up for unconditional sales. All things up this year over last year. And then in terms of this month versus, actually, we don't really get the last month versus this month versus last month. So I'll just leave that one.
Okay. So 2,630 over active listings for February. Okay. So we're just doing week over week, and we have 340 new listings in the past few days. 155 are pending. So that's a really good list sale ratio. 113 price decreases. So these are listings that aren't selling, and the seller and the realtor are chatting about where they are and what they're going to do to get it sold. And that's usually a result of lack of viewings. And then the number of solds is high at 213. That's because they've transacted and gone through. That's compared to 130 the week before. So overall, we're higher in price decreases week over week. We are a little bit higher in pending and new listings as well. So good job, everybody, working hard.
It's busy out there.
Oops. Jen, you said you had something important to tell. Tell us what's going on.
Yeah, what isn't going on? We have tariffs, and the tariffs are in play. And as much as, over last week, how was this going to affect the market? People had their different opinions on what that was going to happen. Well, we've seen the effect, and everything is plummeting. So what's the Bank of Canada going to do when they meet next on March 12th? It's seeming very likely that they're going to drop interest rates by at least 0.25 percentage point, or drop the overnight lending rate by at least 0.25 percentage point, if not more.
So when you say everything is plummeting, what do you mean?
The bond yields, the Dow, like just the market is reacting to what's happened.
And that affects fixed rates.
That affects fixed rates, yeah.
Now,
so the bond yields, the bond yields have dropped 2.5%, or they're down to 2.5%, and they haven't been that low since March 2022.
Wow.
Mm-hmm.
I mean, that's not that long ago, really, March 2022, but they were very low in March 2022.
So that's
3 years ago.
Yeah.
Yeah.
Well, I'm just thinking in like historic lows. It's not like 20 years ago.
No.
Sorry, Jane.
What I see, I have the feeling of COVID times, like is what I feel is going to happen.
I was listening to the news this morning, and okay, full transparency, we're recording this on Tuesday.
Okay, thank you. Because
but
yeah, if you like what you're seeing, like and subscribe, and please share your comments. But we're not live, so don't put any comments.
Yeah. We're all busy.
I think I'm doing a really good job there of not mentioning the fact that
I can edit out this part.
Why?
Anyway, I'm kidding. It's funny. But I was listening. They were talking about, why is this happening? What what is the purpose? And nobody knows. They were like, okay, well, we've proven we've reduced fentanyl. We've proven we've reduced illegal immigration, and still the tariffs are coming in.
Yeah, and 25%, like you look at the numbers in Mexico versus Canada just even to begin with without making any changes are like on the, I don't know the number, but it's like 100 to 1 or something. Like it is a massive difference, and yet we're being painted with the same brush. So even if there was a legitimate, valid reason, our, and plus, I mean, the US is sending guns and stuff our way as well. It's not like this is, it's just ridiculous. As JT said today on his news conference, he says it's just dumb. Donald, it's dumb.
I heard that, and apparently he doesn't like getting backed into a corner, right? So he's going to come out swinging.
You mean Trump?
Yeah,
Or,
Trump.
yeah.
Yeah, I mean, and also, well, I don't mean. Also, it's interesting how great our leadership is right now, right?
Well, I think people are starting to step up and wanting to have something to lead on. Like it's really, really important, right? So, I think that people have been kind of taking things complacently around Canada. Now people are really,
Yeah.
If you want something done, ask a busy person is one of my favorite sayings. But also, when it's important times, you got to really step up, and some people do and some people don't.
Yeah, I feel Canada in general has stepped up. I'm proud of you guys.
Mhm.
Oh yeah, elbows out, elbows up.
Elbows up.
Yes. Yes.
Okay, so let's go to our stats. Andrew.
Sorry, texting. Guys, it is busy. We're busy Thursday morning, and that's why we're doing this show today. And I'm juggling messages and texts while we're doing our show, which I'm sorry, it's really bad. But
That's okay.
so we're looking at just the MLS active listings over time here, going back as far as February 2023. And again, you can see some of the seasonality and annuality of these graphs. And from December 2024, we're starting to get the standard, spring lift that we would expect to see. And what we don't see is the impact of any tariffs and things. And this is the big question in mind, right? Like, what happens here? This is kind of what was, as you said, Jen, where were we going? Like, this is feeling like COVID times. And just like COVID times, I think because we've gone through COVID times, I think we're going to be more used to tightening our belts and, getting on with things, getting over it and getting on with it. Maybe than we were before.
It's also interest rates if interest rates drop, people get more loose with their spending,
right.
For big ticket items.
That being said, I think the difference being that with 25% tariffs and what's going on in the world, the uncertainty around people's jobs and their future outlooks. That was also uncertain in COVID.
Yes.
But it seems kind of chaotic.
They said in Quebec, I think the aluminum workers were already being let go. So that's a real side effect, right? And they were wondering today on CBC whether or not the CERB would come back, which I don't think it will, but I don't know. Anyway, it's worrying. What's interesting about this graph, though, is the quickness. If you look at February 2025, we're at, I can't really read that number, 2,600. And last year we were at around 2,000, or 2 years ago we were around 2,000. Last year we were at 2,400. So we're moving up more quickly this year, it feels like, than we did last year. The angle of the increase.
Yeah, we're also, as we're, in February 2025, we are just, 200 listings below what we had at the peak of 2023. in October. So our inventory is definitely going up, and looks like it'll continue to go up. And I don't imagine, even with low interest rates, we're going to see inventory levels get really tight. I think we're going to have a good liquid amount of inventory.
Yeah. I like this graph because it shows the new listings and MLS sales. So you can really see the ratio. So the bar graph is showing the total new MLS listings, and then the line graph shows the sales. And you can see we had quite a lot of listings coming up in January, and we were also solid on the sales, and we're climbing quite quickly again on the sales, I think. So it'll be interesting to see what happens in late spring, whether or not we actually reach the inventory of new listings compared to last year. But that was a strong start to January.
January was a strong start. February sales are actually, it's funny because this is showing, this is listings, but sales are definitely up over last month. And the inventory is still strong. So it's all signs are looking good.
Yeah. Okay. All right. So do you want to explain this graph?
Well, we just look at the ratio of listings to sales. So for every listing that's listed, how many properties are selling in a month. And so this doesn't take into account expired listings and so forth, but it's a good graph to kind of just watch and balance out. And we generally say if it's sort of around that 20% mark or below, we're going to be in a buyer's market. We're kind of in a balanced market around the 25 to 30%, I would say. And getting up above, we start to get a seller's market when we're, the higher this number, this percentage. And again, a couple of years ago, we were at a 1-to-1 at one point, where for every property listing we were selling, it was selling.
Yeah. 800 to 800.
Yeah.
That was
now
crazy.
That's again not to say that your property will sell right away. It's not to say that your property actually even will sell at all, because even in one-to-one, because if there's already an inventory of properties that are on there. So for every new property listing, there's a property selling, but it's not necessarily yours.
Not necessarily the same one. Yeah.
Yeah.
Yep. And right now, the other way to look at this is what's the absorption rate. So if we're at 25%, we're looking at 4 months of absorption. So it's like a listing will come on, and in the next 4 months, it looks like it might sell.
Yeah. The way we look at absorption rate, folks, is if inventory actually just stopped and there was no more properties on market, how long would it take, given the current rate, for all the properties that are on market to sell? But again, that's not actually going to happen. That rate will slowly change, because you're just going to end up with all the stuff nobody wanted to begin with and is not really saleable. But that's what we use the absorption rate for.
Okay, so this is a single family homes. 2 years ago, we were just over 1.25. We're now just above 1.3. And you can see seasonally we're going down a bit at the end of the year, and we're coming up. So it's just like the stock market; it'll ebb and flow. But if you were to look at this over time, in 20 years, it would look fairly flat, with maybe a slight decrease since July of 2023. What do you think, Andrew?
Well, I mean, I think if you were in June of 2023 through July of 2023, you would have felt like, hey, we're back into a really, really strong market and things are really going up. So, we have been pretty stable since October, November of 2023. Not a lot of up, not a lot of down. Always hoping with real estate markets that it continues to go up on a really kind of average basis, just kind of in alignment with inflation and everything else. We always kind of expect that, and you would kind of expect on average that they say on average the value of homes double every 10 years or so. So we've been actually really flat in one sense, and you'd almost expect to see at some point coming soon, given history, things to start going up again. But we've had a couple of unprecedented things happen as well that have been affecting it. Again, right now it's the tariffs, and in the past it was COVID.
So one thing I tell people when they're looking at selling and they want a market analysis, first of all, I can't give them an amount until I see the house. And the other thing is we never know what will happen one day. One day can make a big difference. Between yesterday and today, there was a huge announcement, and that affects the market just like it does the stock market.
Yep. And you know what? A lot of people were woken up at 5 a.m. the other night because there was an earthquake that rumbled through, and it was, not insignificant. I somehow slept through it. I don't know how. But, we've had a number of earthquakes recently, so, gets you thinking again about the big one. And these are the things that, the big ones, as Jane in quotes. So these are things that can also, you never know day to day what's going to befall you.
Yeah, exactly.
And it's going to impact the market. But you can't make decisions on the what ifs.
Yeah. Okay, Andrew, condos, how we doing?
Condos are doing really well. They have not been doing super well for the last while. Prices have been relatively flat. They actually, went down pretty low in December of 2023. They also actually had a drop again in December 2024, but they seem to be popping back up in the last couple of months. They've had a rise from December to January, from January to February, and it's pretty significant, good steep angle there. And, it's good to see the condo market coming back because it's been a bit stale for a while.
It has been stale, and I think part of that is it would be interesting to see if we were to look at the new listings to sale ratios for condos themselves as opposed to the whole market, because I feel like we have a lot of condos, especially on the West Shore. We have a lot of condos. So this is looking at the market in the big picture, but I talk to sellers all the time as we are listing what's going on with their market. And some markets so if you're a recreational property, it's going to be different because you're, the whole market just moves slower. But if you're a condo in the city, you would expect some action to be happening. And it's been a bit slow, I'm finding.
We just had subject removal today on our downtown condo, little 1-bedroom unit. And I think we got a really, fair price for it. Beautiful corner unit with some parking, but not a large place. And and that one sold within, an offer within a week on market. So
it had parking though?
It had parking. Yeah. Yeah. And that can be a rarity downtown.
Yeah. Okay. So row townhouses over the past year, we're seeing, except for the dip in December 2023 and January 2024, it's been fairly even. I had somebody looking at townhouses last year. I'm finding a lot along the Shelburne area, very popular. They're well built too. And they're in the higher price range here. The lower price range townhomes, you're going to find them more on the West Shore. So relatively speaking, this is an average, but depending on where you're looking in the market. There's also Sydney, which has two types of townhomes. So you can get single level, same with in Esquimalt, or you can get double level, two or three with lots of stairs, which to me is kind of the wrong market for that. Anyway, okay, so we're done for now. Any comments you guys want to add?
Just wait and see what happens with what's going on in the States and what's coming our way, because I do know that consumer sentiment makes a big difference in our market. And buyers and sellers, once the media and the news messaging and the results start coming in, we may find our markets dry up. And at the same time, it might surprise us like COVID did, and we find that people are really wanting to make some changes and move things forward. So I can't really, people are asking all the time, and I've just been in this business so long, it's gotten to the point where I don't know. The more you know, the more you don't know, if that makes any sense.
The more you know, the more you know you don't know.
That's true too.
Yeah. Yeah, I agree.
And it changes week to week. Like it's crazy. Yeah.
Yeah.
Interesting times.
I will say, though that if you, no matter what market you're in, if you price your home properly, you will get a good result quickly. So, which goes to speak to your condo with the parking downtown, right? And the half duplex I just sold last week. If you'll get lots of activity, there are buyers for this market, but I don't think it's the type of market to list high and negotiate down right now.
No, definitely not. No, it's more price sensitive. Okay, well, everyone, thank you for being flexible on timing, and I'm glad we got this done. And we really appreciate everybody who takes the time to listen to us. All we have to say.
Yep. So we are on every Thursday morning at 9:30. So Andrew, how do people meet? How do people get in touch with you?
Reach out. I'm at 250-360-6106. You can email me at info@andrewplank.com. I'm on Instagram under Plank Andrew, and the Vibe Collective team, our website is realvibe.ca if you want to come check out our site and our team. Okay, and Jen?
I am at 250-217-4925. I'm with Modern Mortgage Group. Email is jen@jenlow.ca, and my website is jenlow.ca.
All right, everybody. My name is Jane Johnston. My number is 250-744-0775. My email is briarhillgroup@gmail.com. You can look at our listings at briarhillgroup.com, and you can see this show and more at victoriarealestateshow.com. And don't forget to follow me on Instagram at realtyteacher_remax_Victoria or Briar Hill Group for our team. Thanks, everybody. Have a great day, and it was so great to see you guys. We'll see you next week. Bye-bye.
Bye.
Bye.